Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Hey folks, welcome aboard. What a great little intro video that is. I'm Sam Saggers. Welcome to Wealth Coffee Chats. Despite seeing my sign, my neon sign, the Urban Property Investor, today I am doing Wealth Coffee Chats. So welcome aboard. Jason, who is a regular host on Thursdays, is away today, so I am filling in. If we haven't met, my name is Sam Saggers, and really what I do for a living is put real estate deals together. So if we haven't met, lovely to meet you. A big part of my job these days is really sharing information. So a few people tuning in, look like regulars, Kevin and Brian and Bunty. Thank you for tuning in on this, little bit cold Wednesday morning where I am in Sydney. But I don't know, I think I like winter. Do you guys like winter? So I'm here to answer some questions today, if anyone's got any questions they want answered. But I tell you what, you know what just happened to me? Parked my car in this one spot for a couple of days, and I've got 6 traffic fines. So I am furious because I don't know, do they not leave the little white ticket on the window these days under the windscreen? I don't know how I got 6 tickets in a row. If anyone's a traffic lawyer, I would love to speak to you because I now have a serious amount of fines to deal with. But that's life, isn't it? There's always a few curveballs, and certainly property investment has a few curveballs as well. But today I thought, why not get into some ideas around investment selection? So I don't know, I might throw to my slides and we'll have a quick chat about really the concept of how to choose a property investment. Now, folks, I teach a 4-quadrant property investment selection system. They are capital preservation, growth, yield, and tax. With any investment, whether it's stocks, whether it's property, whether it's buying a business, any investment in any asset class, I follow this investment selection system. It's really, really, really simple. Obviously, capital preservation is paramount to any type of investment in any asset class. Effectively, will you be able to get your money back from buying the investment? What is the risk profile of the investment? And when I analyze real estate, really, before I even get to will the real estate actually grow in value, the first question I have is, will I be able to get my money back from this real estate at a worst case scenario? Is there risk in the area, in the location? Is there risk in the dwelling? Is there risk in the tenant profile? What is going to secure my capital? Really, again, it's the same with choosing a share or even buying a business. I want to know my money's safe and secure. Obviously, the next phase of choosing an asset is, will it grow? And really, growth is probably the easiest way to get ahead through property. Certainly, yield is important, but the highest growing properties will have the lowest yield. And so, generally speaking, if you go and look at real estate that today has grown the most, and real estate has grown exponentially in pockets of Australia, you will find the 2, 3, 5, 10, $20 million properties carry a very low yield, but they've become 2, 3, 5, 10, $20 million properties through growth. And so growth is really more important than yield, but yield is the next part of the 4-quadrant property investment selection system. What is the yield? Will the yield grow? Is it under rented as a property? Can the rents be improved? Can you manipulate rents to achieve more? So really, yield is the third part of the puzzle. First part, will I get my money back? Second part, will the real estate grow? Third part, what are the yields and where can they go over time? Now, when it comes to yield, I teach another quadrant of yield performance, which is also a 4-quadrant system of how to understand how to drive a higher rental return. But it's an important part of the puzzle, but certainly real wealth is going to be created through growth and not going backwards in real estate. Too many people buy real estate, and what happens to them? They choose the wrong real estate and they go what is referred to as negative equity. Life is hard enough as it is to end up in a place where your real estate is going backwards. It's difficult today to make a living out of just going to work. So if you go to work and you buy real estate that goes backwards, that's a real problem. So capital preservation is really the golden rule here. Welcome aboard, folks. We've got a few new people tuning in. Jeff, Allison, thank you for tuning in. And of course, the final part of an investment selection system is the tax considerations the investment has. Obviously, in the share market, it's like franking credits on the shares. In business, it could be some sort of tax deduction around the input of the business. And of course, with property is tax effective for investors, particularly if it's more modern. There's sort of 3 phases of where you can maximize your tax benefits from real estate. Really, we've had 3 rules when it comes to, in particular, depreciation. You have the 1987 rule, which basically sort of states that anything built before 1987 does not qualify for depreciation unless it's gone through a rebirth of renovation. Then you've got the 2017 rule, which effectively states that for property investors, they can claim depreciation on the building, but not the inclusions if they buy a property built after 1987. And then, of course, you can flip over to buying a brand new property, which has both building depreciation and depreciation on your kitchens, your bathrooms, your inclusions inside of the building itself. So with real estate, the beautiful thing is if you don't want to pay too much to hold real estate, you can use the tax system and the yield system to your benefit to prop up the real estate. And that's really how today people own real estate for $100 a week, $200 a week, that kind of money. So that's the system. And of course, if I was to flip over to where the markets are at the moment, um, what you see on your screen is effectively a lot of sub-markets around Australia, including some major marketplaces. And so if I go through my investment selection system, my 4-quadrant investment selection system, what I can see by some of these marketplaces, I would be worried about capital preservation. I would be worried about getting my money back out of the deal because really the industries in some of these places, are circumspect. So if we start at the top, obviously Byron Bay, Kiama, Sydney, the Surf Coast, which is, sort of around Geelong, Noosa, Bowral, Gold Coast, Ballina, Kingscliff, Sunshine Coast. Those top 10 areas where real estate is the most expensive. Other than Sydney, which obviously has got a lot of industry, and the Gold Coast as well, and the Sunshine Coast, you've got really what you are seeing there is a lot of baby boomer money moving into those areas, a lot of wealth going to lifestyle areas. So I'm a big believer in lifestyle areas. If you think about Kiama, it's a beautiful lifestyle area on the south coast of New South Wales. Byron Bay, beautiful lifestyle area. Surf Cove, lifestyle area. So what's happening is, demographically speaking, people are buying up lifestyle. Probably for me, from a capital preservation point of view, I would then go to Sydney, which is a major marketplace, which basically has so many jobs, and go, how can I get the Byron Bay effect in Sydney? How can I get the Kiama or Bowral effect in Sydney? Where are the lifestyle suburbs in Sydney? Because I want to get my money back out of a deal. I don't want the marketplace to go to sleep. Obviously, Kiama, 23,000 people. It's a beautiful spot, but could it go to sleep at some point, and would my money be stuck there? So I tend to take the principle of the Byron Bay effect and apply it in your Melbournes, your Brisbanes, your Sydneys, and try and find lifestyle. Because what you're actually seeing on your screen is quite incredible, right? Like if you look at most of the names on those lists, what is effectively the clue is lifestyle equals real estate growth. Byron Bay, Kiama, Surf Coast, Noosa, lifestyle area. Gold Coast, lifestyle area. Kingscliff, lifestyle area. Sunshine Coast, all about lifestyle. Wollongong, beautiful part of the world, in my opinion, lifestyle. You got Canberra, obviously many lifestyle benefits to Canberra, but again, you want to find a lifestyle part of Canberra, which has got great shops, schools, reasons for people to want to live there. Adelaide Hills, lifestyle. Newcastle, I think it's got one of the best lifestyles in Australia. I'm very pro Newcastle. I happen to own real estate in Newcastle, but very pro. Shell Harbour, all lifestyle. Yass Valley, which is effectively part of Canberra. It's a little bit of a country kind of vibe, that one. Lake Macquarie, all lifestyle. So if we look on the left-hand side of those lists, you can see the lifestyle markets are the most expensive effectively. And what our job is how do we preserve capital in a lifestyle marketplace? Well, let's go to Melbourne, because Melbourne will preserve capital more so than, say, Coffs Harbour. But how do we find that, Byron Bay effect in Brisbane or Melbourne? Then if you flip over to the least expensive marketplaces in Australia, there's some hidden value in some of those marketplaces. If I was to look at, for example, Perth, it's a powerhouse of Australian economics. It's a beautiful place too, Perth. It's up there with Sydney as it's one of the prettiest places going around when it comes to a major city where more than 1 million people live, and you can see underpriced. Really, Perth as a macro market should probably be a little bit more expensive than, for example, the Yass Valley. But hey, so it tells us we can make money. And then if I look at some of those areas, Toowoomba, you can get some lifestyle. Cairns, you can certainly get lifestyle. The problem with the tropical marketplaces these days is insurance. So then you go, well, the extra insurance burden to buy in Cairns because of cyclone risk, capital preservation, will I get my money back? It's kind of the considerations you need to sort of think about. And then as we flow down the list, we're entering those smaller marketplaces, perhaps a little bit more disconnected from being able to drive to our big cities where there's major commerce. Wollongong to Sydney is an hour drive. It's virtually the same place, but Dubbo to Sydney, it's a 5-hour kind of commute. So, you could not effectively use the commerce of Sydney and live in Dubbo without sort of, either being very digital or flying. So we can see, obviously, if we go even down to some of our powerhouse, really, I don't want to say ugly, but they're pretty ugly. Places like your Gladstone. I mean, it's the biggest port in Queensland. It ships a lot of stuff out to the world, but it's, for the most part, not what we would refer to as a lifestyle city. People don't move to Gladstone for a lifestyle. They move to Gladstone for, work, LNG, gas, it's a deep port in Queensland, jewel in the crown in the port scene of Queensland, but it's not a lifestyle area. So the point of the conversation is, if I was using my property investment selection system, which is capital preservation first, I need to consider the risk, the downside risk. And I go, well, is there less downside risk in a place like Sydney than there is a place like Kiama? Is there less downside risk in people getting their money back in Melbourne than Gladstone? Is there less downside risk in Brisbane over Bundaberg? And the answer, of course, is yes. There's less downside risk, so there's a higher ability to preserve capital. The clue here, though, is if we can go to the lifestyle precincts of Brisbane, Melbourne, Canberra, Sydney, Perth, we can do very, very well, because the clue here is how expensive have lifestyle precincts become. They are tremendously expensive. And sometimes, what you'll also notice is Byron Bay is more expensive than Sydney, but the aggregate size of Sydney is over 5 million people. So it's got a much larger data set, which kind of skews the numbers. In Sydney, you can buy $100 million house. In Byron Bay, you can't buy $100 million house. So, there's relativities to the data. The bigger the data set, quite often it will pull down the price metric of the overall aggregate. But that's how to approach. Well, that's how I approach investing. That's why, I guess, if you're one of my clients, you probably don't see me talking about Dubbo a lot, or Shepparton, or Rockhampton. There's probably some great suburbs and streets in all of those places which, could make someone a buck. But I look at things as capital preservation. Where are the strong marketplaces? If economics changes and there's a downturn, is Sydney safer than Kiama? It is. It absolutely is. Is Canberra safer than Mackay? It absolutely is. So capital preservation, growth, yield, and tax. That's how you buy investments, whether it's on the stock market or in the real estate market. But hey, folks, that's it from me today. That's my attempt at being a wealth coffee chatter. I don't know if I'm a very good wealth coffee chatter, to be honest with you, but hey, I'm here giving it a go, and I'm going to go pay 6 traffic fines, which again, I think is ridiculous. If you park the car in one spot and you leave it for 6 days, is it actually legal to get 6 fines in a row? Don't get it. I thought that would be 1 fine, not 6, but hey, capital preservation on parking has failed me. So follow the rules, read the signboards, and you won't end up with parking. And talk about inflation. Guess how much a parking fine is in Sydney? Anyone want to take a guess? $100, $200? Anyone? $302 to a fine for parking. $302. Wow. Fight the system, Alison. I agree. 286, says Deb. Unbelievable. 280. Wow. Yeah. I mean, that's a lot of money. Now, I'm not short of a quid, so I'm not too stressed out about it. But geez, if you were young family, couple of kids, that's a lot of money out of the budget, folks. Household budget. So getting tough out there for everyone. The big lesson I've learned over the last 24 months, inflation will absolutely smoke you. Put your job, buy an investment, put those two together, and you can beat inflation, and you can end up being able to afford 6 $302 fines. Don't know. All right, folks, rock on. Love your work. That's it for me. Over and out. Have a great Thursday.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.